Okay, let's dive right in then. There's some pretty big news-making waves, especially for anyone affected by the whole FTX situation. A major payout is finally happening.
That's right. Big news indeed. We've looked through a bunch of sources. You shared news pieces, official updates, notes from the FTX bankruptcy estate itself.
Yeah, and we're trying to get our heads around it, figure out what's actually going on with these distributions, who's getting the money, how much is involved.
And crucially, the controversies. Because, well, it's not exactly straightforward.
Definitely not. Our mission today is really to unpack all of that.
It's complex, and it hits home for a lot of people financially. So, yeah, worth digging into the details.
So first things first, the headline event, the FTX Recovery Trust. They've started a second round of payments.
Yep, just kicked off. May 30th was the start date.
And the number is staggering. We're talking $5 billion being paid out this time.
$5 billion, yeah. And according to the sources, this is going to eligible creditors, specifically folks in what they call the convenience and non-convenience classes.
Right, assuming they've done all the paperwork, the pre-distribution stuff.
Exactly. And the money's flowing through official partners. The sources mentioned Kraken and BitGo.
Okay, Kraken BitGo. And people should expect to see the funds pretty quickly.
The partners are saying about 1 to 2 business days from when they send it out.
Okay. Now, $5 billion is a lot, but this isn't the first payout, right? There was an earlier one.
Correct. Good point for context. There was a round back on February 18th.
And how much was that one?
That was smaller, $1.2 billion.
Still significant, but yeah, much less than 5.
And that first round was targeted differently. It was mainly for creditors with smaller claims, generally under $50,000.
Ah, okay. So this $5 billion round is reaching, well, potentially much larger creditors too.
Exactly. Casting a much wider net this time.
Let's get into the nitty-gritty then. How much are people actually getting back? Because the sources break down these percentages, and they're not all the same.
Not at all. This is key. It really depends on how your claim was classified, what kind of assets or funds you had tied up in FTX.
Right. So, for instance, Dotcom customer entitlement claims, they're getting 72% back.
72%, yes.
Yeah.
But if you were classified under U.S. customer entitlement claims, it's lower 54%.
Okay, 54%. Then there's this interesting one, convenience claims. They're getting 120%, more than their claim.
Yeah, 120%. That often happens in bankruptcies for very small claims to just clear them off the books sufficiently.
Makes sense. And what about general unsecured claims or digital asset loan claims?
Both of those, according to the sources, are slated for 61%.
61. Okay, so there's quite a range there, from just over half for U.S. customers up to that 120% for convenience, and others in between. It's definitely not flat across the board.
No. And, whenever you inject $5 billion of liquidity like this, especially into the crypto world,
people start asking where it's going to go.
Exactly. The big speculation is, does this money flow back into the crypto markets?
Right. Could it boost prices? The sources mentioned this was speculated about even after the first smaller round.
Yeah, people like Alvin Can at Bidget Wallet were suggesting that back then. With $5 billion, the potential impact is, well, potentially much larger.
And the flip side, what if people just cash out or swap it?
That's the other possibility. If a lot of people take the funds and sell or swap quickly on exchanges, you could see some significant price volatility.
It all ties back to that original collapse, doesn't it? November 2022, FTX and FTT going down, shaking the whole market.
Absolutely. Yeah. The collapse caused shockwaves, and now the recovery process itself is creating new ones.
Okay, but let's pivot slightly. Because while money is moving, there's a huge cloud hanging over this, isn't there? A major controversy.
Oh, absolutely. This is probably the biggest point of contention. It's how they're calculating the reimbursements.
Explain that. What's the issue?
The sources and court documents from last September confirm this. Creditors are getting paid back based on the value of their assets on the petition date.
The petition date, meaning when FTX filed for bankruptcy.
Exactly. Back around November 2022, not based on today's prices or even recent prices.
And why is that such a big deal for crypto holders?
Well, think about crypto prices back then. The sources give the Bitcoin example. BTC was around, $16,000?
Oof. Right, compared to now.
Exactly. So an investor quoted in the material says the result is creditors are effectively getting maybe 10% to 25% of what their crypto is worth today.
Wow. That's stark.
Yeah, and you hear the frustration loud and clear from people like Sunil Kavuri, who's been advocating for creditors. He's quoted saying, Crypto holders are not whole at petition date prices, and points out this is confirmed by the debtors, the DOJ, even the judge.
So even if you get, say, 72% back based on that 16K Bitcoin price, it feels like a massive loss compared to holding Bitcoin that might now be worth, $60K or $70.
Precisely. That's the heart of the controversy. It feels fundamentally unfair to many who held assets that appreciated significantly since the market bottomed out around the time of the collapse.
It really highlights the challenge of applying sort of traditional bankruptcy rules to these really volatile digital assets.
It does. The rules were mostly written with different kinds of assets in mind.
And is that the only major sticking point, or are there other controversies?
There's another big one highlighted in the sources. It's about who can even receive these payments.
Eligibility. What's the issue there?
Back in February, it came out that creditors in a huge number of countries, 163 according to the sources, are actually ineligible for reimbursement under this plan.
163 countries. That's a lot. Do we know which ones?
The sources give examples like Egypt, Iran, Russia, Greenland, Pakistan. It's a long list.
Wow. So huge numbers of people who lost funds might not get anything back simply because of where they live.
That seems to be the situation, yes. And Sunil Kavuri, the same creditor advocate, has also been vocal about this being deeply unfair to global creditors.
Okay, so let's try and tie this all together. What's the takeaway for someone listening?
Well, on one hand, you have this massive $5 billion distribution finally happening. That's real money going back to many people, and it could ripple through the crypto market. That's significant.
And it's a big but. The way it's being done is causing real anger and frustration.
Exactly. Two huge points of contention. Using those old low asset values from the petition date, which massively disadvantages crypto holders compared to current values.
And excluding creditors from a vast number of countries entirely.
Right. So for you, the listener, this whole FTX saga is a really powerful, maybe painful illustration of just how messy these large-scale bankruptcies are, especially with new asset classes like crypto.
Yeah, it shows how the technical details, like a valuation date or eligibility rules, can totally change the outcome for people on the ground.
It really drives home that recovery doesn't always mean made whole, and it's rarely simple or satisfying for everyone involved.
Definitely not.
And just thinking about this, based purely on what we've discussed,
Yeah.
it leaves you with a pretty challenging question, doesn't it?
Which is
This whole idea of using a past date for valuation in bankruptcy, especially for something as volatile as crypto, it really makes you question what fairness is supposed to look like in these situations.
if the goal is recovery, making creditors whole, does valuing their assets at a fraction of the current market price actually achieve that, particularly when the assets have recovered so strongly?
Exactly. And looking forward, as we unfortunately might see other digital asset firms face similar issues, how should the system adapt? Does bankruptcy law need rethinking for these kinds of assets to strike a better balance between legal tradition and the wild reality of crypto markets?
Those are big, difficult questions, and this FTX process is certainly forcing them into the open.